Hey traders, checking in on the stock market today. The bears dropped the hammer. The bulls were on their way to attempting to establish a trend change, but zero follow through, and I was incorrect with what I felt was the most likely scenario. I'll show you what it was. So this is the S&P 500 falling wedge that we were keeping an eye on, and it is breaking bear, which is certainly notable, and we're testing our fear lows. So pulling up SPY, that fear low is 420.76, and we closed $1 above it. So we are knocking on the door. What's been notable on this drop is a couple of things for me. Number one, I would have expected bear volume to be notably higher. It does come in at the end of the day. You know, you look at the regular trading day and there's really nothing, but then it pours in the last 20 minutes. But overall, to see this drop to a straight lower low, which we are again knocking on the door of, I would have expected more significant increasing bearish volume. Either way, the bears are keeping their complete control. So started the day looking in the right direction as far as, you know, the most likely scenarios over the last week plus. Can't really complain as far as how they have played out really well. And this morning was no different because the most likely scenario, first thing, was a rejection from resistance and looking for the lower high. So we certainly knew it would be possible for a bull break, but we had our low, high of the bounce, higher low into yesterday. This is where we were opening the morning. Resistance, price resistance is right there. Downtrend resistance is right there. So we know aggressive bears are looking for that top fish. And what I anticipated from that point as the most likely scenario was the same as yesterday. So yesterday we anticipated this higher low as more likely than not due to the size of the bounce. So again, I had that same mindset. Due to the size of that bounce, I anticipated that this would be a 4-hour equilibrium and that we would hold that low and tighten up into tomorrow. And obviously, that was wrong. And so bears followed through with significant downside action. What's also been notable is we don't really get crushed RSI levels here. And it's because of these bounces on the way down. You look at the daily time frame and the SPY daily RSI is not oversold. We're close, but look at the first leg down. So why is the first leg down with an RSI that dropped all the way to 24? It's the closes. So we were closing at the low and we just had a straight waterfall drop. Every little bounce in here, and there's a lot more in the shorter term time frames, every little bounce cools off the RSI. And when I say cools off, I mean goes from oversold, maybe it drops down to 25, and then it goes back up to 35 on one of these bounces. So looking at the S&P 500, again, the green day yesterday cooled off RSI levels. The 4-hour RSI was oversold 2 days ago, cooled completely off. It went from 28, 29 up to 44. And so even today, after a 3% drop from where we opened on the morning, the hourly RSI was only just getting to 30. And again, it's all due to the bounces. When you're bouncing on the way down, bears can keep control longer than if you are flushing and hitting extremes, because traders like myself and bots and algos and programs look back and say, okay, historical RSI levels, this is what's happened in the past when this happens, and that's when we look for bounces. And really it was, you know, we started today weaker first thing. You know, we look at yesterday and we bounced and then rolled over. This was just a straight drop, little V-shaped bounce attempt, but never changed the 15-minute trend and just rolled over with complete bear control from there. So you can see the 15-minute RSI got crushed, but it cooled off with that bounce. That one little bounce took things from the teens all the way up to 48 and allowed for another leg down. One more thing to note. The past few days, bears has obviously been the direction to be looking at in the morning, but there's been these fake out breaks of the high of the day right before we roll over. And today it happened on the 1-minute time frame where we had the high of the day, talking about a 1-minute top fish first thing for bears, and then a V-shaped bounce to a new high of the day. And again, do not trust bull moves that don't change trends, because we break resistance V-shape and then that's the high of the day and we roll over from there. And again, anybody that stop is too tight, they get stopped out there. And if we go back to a couple days ago, 2 days ago, it was very similar. What was this? This was yesterday. Too zoomed in. 2 days ago, it was the same thing in the sense that we started weak. We broke the high of the day. with a V-shaped move. It's easier to find on SPY or QQQ. So there we go. Weakness initially, first thing. V-shaped bounce to a new high of the day, just barely. Just break resistance by 8 pennies. Stop anybody out that is too tight, and then roll over for the rest of the day. So that V-shaped bounce, becoming familiar with it and recognizing not to be fooled by it. And again, that's 2 of the last 3 days that has shaped up. Trade I took today ended up looking in the wrong direction, left a bunch of money on the table as far as not being more aggressively bearish, but I was playing this falling wedge on the NASDAQ. And again, my style of playing falling wedges, check out the YouTube video where we talk about it. But I was actually on the 1 minute time frame, and my style is I enter half on a bear break. Why would I enter on a bear break? Because again, if it's a wedge, by definition, that means a bear break is lacking any follow through. So I was live streaming when I started this trade. I got myself real comfortable where, you know, my break even was under the low of the day at that point. And what had me in this trade is, number one, the low of yesterday's support was coming into play and still holding. And number two, the 15-minute RSI was crushed down in the low 20s. So I'm playing for a 15-minute oversold bounce using the backdrop of low of yesterday's support. And so I forget, you know, I can't even possibly go over all my trades. But what I did was recognize 2-minute EMA 12 was the place to be selling. I could either use this downtrend resistance line as my guide as where to sell, but I was using 2-minute EMA 12. So what I do is, you know, I initially played the bounce, and my stop was, or my break even was under the low of the day at that point. And I was in a half position because I sold half to get my break even that low. So then we had this tightening range, bear break. 15-minute RSI hasn't cooled off at that point. I'm still interested in this trade. I add my half back. I sell it at 2-minute EMA 12. Why do I sell it there? 1, 2, 3 rejections in a row. And if I'm being cautious and conservative, I'm selling there to give my ammo back. If I'm only entering 2 full positions, every time I'm in my second position, my stop goes down at a day loser level. This is the dollar amount I am willing to risk on this trade. And every time I sell half, I don't need to have a stop loss in because my day loser level is a long way down and I have my ammo back where I can maneuver. I can stay in control of the trade. So I buy the new low of the day. I sell EMA 12 resistance. And again, I just keep dropping my break even down. I buy the new low of the day, sell EMA 2 resistance, either here or here. And then I just kept doing it. Reload the half, new low of the day, sell partial. And we finally got, it took a lot of work. You know, it took me maybe 6 different flips to remain in control of that trade, and then just scaled out because as soon as the 15-minute bounce got going, my reason for being in the trade is no longer there. And again, there's that low of yesterday, and we held it by 7 cents initially. So I exited 2/3 of that bounce to give myself the ability to be risk-free with a stop under the double bottom. And if we set a 4-hour high or low and form the equilibrium, which I feel is the most likely scenario, I've got a great position for it. I nailed it, essentially nailed the bottom with where my average is on that remaining position. And in the end, I left the computer for a couple hours, and that's the direction I wanted exposure in, knowing it was very protected, and stopped out. So that was me being wrong, and that was the outcome of me being wrong. So gave back a little bit of profit. Essentially was a non-event trade there. We'll just call it break even, and then missed the weakness to the downside. I still got my SQQQ swing position. I've still got some core USMJ positions, but overall, again, my money is made on the bounces, and so my goal is to just not lose money until those bounces take place. And then I make my week maker on a bounce in one day, and it makes up for missing days like today. That's me and my style, but there's certainly plenty of bears out there making a bunch of money. So looking at our other sectors, we had another top fish. Again, SMH, high of yesterday. We break that level by 9 pennies, double top, and roll over to lower lows. So everybody's looking at their fear lows. And the only thing that's different, how close are we to fear lows? QQQ is now at fresh lows. So with no new fear, or with no fear bottom on QQQ, we know the S&P 500 is not going to bottom until QQQ finds a bottom. So it's now the hunt for a fear low. And it was the same as last time. We found that fear low, and it held as a low for a few weeks. So now we need to find a new fear low, and the S&P 500 is on the verge of breaking its fear low, and SMH 249.36 is approaching its fear low. Tesla broke its fear low. So Tesla's approaching daily oversold. It's not a back burner because we came from all-time highs and hit first daily oversold conditions, and that led to the nice bounce off of 792. So daily oversold means less to me because it's not our first time hitting it. Next support level, I'm looking down at 708.85, and the bears have complete control. The hourly downtrend, we are watching for an hourly, if we gap down, certainly looking for an hourly bounce tomorrow, but tons of space for an hourly lower high. Again, if you want to determine, if you're trying to play a bounce, there are a number of ways to play a bounce. Catching a falling knife, which I do not recommend for anybody that doesn't have a significant amount of experience playing oversold bounces with success. Number two, waiting at just every time frame, determining most aggressive, trying to catch that bottom. Second most, third most, fourth most. So second most is waiting for a 5-minute bounce, a big 5-minute bounce. Say, okay, I'll play it for the higher low and put my stop under the low of the day at that point. Another trader is going to wait for an hourly bounce to take place, and they're not going to care that they miss it because they know an hourly trend change is going to have to take place. So they're going to enter on the hourly consolidation and put their stop under the low. Every time frame that you zoom out on, your stop's further away percentage-wise, which means your position size should be smaller to reflect that additional risk. I do not have anywhere near the same position size as day trading as I do swing trading, because day trading, my stop is 0.2% away. Swing trading, my stop is 2.5% away. That's a 10 times, more than that, it's a 15 times more risk. So even more patient bulls are going to say bounce without me on the daily. I know we're just looking for a daily lower high. I'll try and enter the higher low. I'll put my stop under the low. So again, determine the time frames that are most important for you, because the last thing you want to do is get analysis paralysis in this kind of fear environment and you don't know where you're looking. On a 2-minute time frame, on the hourly chart, I'm on the daily. So if you're trying to establish a trade game plan, time frame first is most important, because if I'm looking at the daily to establish my trade game plan, I have no business being anything under the hourly time frame as my lowest point that I'm looking at. If you care about the daily and the weekly and you're looking at the 5-minute, that is too zoomed in and it's too much information, and I would suggest zooming out. So for Tesla at this point, there's a plenty of time frames that are still in uptrends, but we're in a falling knife scenario. Again, anybody that's hitting a new fear low, we have to see a new fear low found. Otherwise, we are in free fall. And so we're looking at the monthly time frame for Tesla. We just lost EMA 12, or we're losing it potentially. So really, I don't have any interest in looking for a Tesla bounce. I'm not looking to be an aggressive bounce trader. The only way that I would have interest, again, these daily charts where we stand right now, I talked about it yesterday, where I certainly hope that Russia does not invade Ukraine as human Dan. But Trader Dan is looking at this daily drop and saying, okay, this is a daily waterfall drop. And the headline that we reacted to today is, the U.S. is pretty sure they're going to invade within 48 hours. We've heard that before. But if an invasion takes place, again, I'm going to go aggressive. I've already determined it, and I will risk the profits I've made on the year. And what I would do is, if it looks like this, if we are already waterfall dropping and we get official word that the invasion is taking place, I am looking to buy after the initial waterfall drop down. That's when I'd be interested in buying Tesla and a bunch of these other beat up names, maybe even Facebook. So that's what I'm going to be looking for as a trade from here. So I hope it does not happen, but Trader Dan is going to be ready for it to happen and have my game plan established. And worst case scenario, I'm dead wrong, and I stop out and get back my profits on the year, which would be a bummer, but I'd still be massively outperforming the S&P 500 if that were to happen. So taking it one day at a time, because again, all it would take would be a little 1 or 2 day bounce, and that game plan shifts for me because it's no longer the same scenario. I am in sidetrack mind mode. So we got XLV holding the low of yesterday, but again, the fear low is all we care about right now. 124.92, bears in control, broke the high of yesterday by 5 pennies. It's a double top. As long as you give the bears the easy top fishing play, they're going to keep entering at resistance levels and keep their control. And again, I keep going on tangents, but you have seen now day after day where the high of the day is set within the first hour of trading. So pretty much if you short in the first hour of trading, you win. And that's going to change obviously, sooner rather than later, probably, because once a pattern gets clear enough to everybody, it stops working. But 1, 2, 3, 4, 5 days, that's been the case. And so what will be notable to us is if the bears that are entering their morning positions get stopped out with a new high of the day in the middle of the day, that's going to stand out to us as, okay, it's a bit different. But it's back to square one for bulls to try and set up a trend change. They had, trend changes are steps. Step 1, step 2, step 3. Step 1, in this scenario, you need a big enough bounce to create the space for a higher low to try and form. Step 2, you got to form that higher low. Step 3, you got to confirm the trend change, bounce underway. So the NASDAQ had step 1 and step 2 out of the way with the bounce that's big enough and with the higher low. But they couldn't confirm the trend change, and now they're back to square one. So what does that mean? We have to see a big enough bounce. We have to see a higher low. So it just erased the work. The bulls had put in some work and put in some progress, and now we're back to square one. And again, it just keeps the bears comfortable. XLF, big bear day, weekly time frame. We're still looking at the 3682 low. It would probably be the last sector to break its fear low if everybody's going to fall through supports. So still watching for a higher low compared to 3682, but a big wide range that will have us looking for a weekly lower high next bounce and the potential of an equilibrium. IWM, fear low, 188.09 coming back into play, 2.5% away. And next time we bounce, again, let's not forget, even the names that still have weekly support, next time we bounce, all today did was just create even more space for the daily lower high to be the result of the next bounce, which bears will be waiting for. Biotech sector, rolling over, fear low, 83.89 is back in play, weekly bear flag, close to confirming. Again, hourly downtrend, just a clear guide. Unable to break resistances from yesterday, hourly lower high midday, flush into the close. It's the case for most names today. MSOS, USMJ sector. So again, sectors that still have the fear low holding, they need the NASDAQ to find a fear bottom, and they need the broader market to obviously bounce to help weekly higher lows form. Bitcoin's in the same boat. If we keep dropping, we're eventually, you can't hold up stronger than the broader market. You can only hold up for so long. Eventually, it's going to drag you down with it. And so we can say, yep, it's holding on better. We still have weekly support. We're trying to set a weekly higher low. But if we don't see the broader market bounce, it's just a matter of time before we break supports. Have to see the broader market bounce. Lots of space for a daily lower high to be the result of the next bounce from here. Again, the trade right now, the inverse relationship between gold and oil, and the broader market. And so gold is a potential daily bull flag. Didn't get a chance at hourly oversold miners, which I would have enjoyed that bounce play, but the trade didn't come to me. Looked like pre-market it might. For a moment there, when I started pre-market prep, we were set for a gap down open, small one. But at that point, hourly RSI was in the upper 30s, but bulls controlled the entirety of the day because we shot up as the market dropped down. And the bulls are attempting to confirm the daily bull flag, have to get over 35.11 on the miners. And gold is attempting its bull break as well, have to break 19.14, and really it's 19.17. And oil, keeping control, daily inside bar, 12 hour is tightening up though. So top of this move, higher low is 90.64, and we would have to, inventory reports tomorrow, so it would have to be a bearish reaction to the inventory report if we were going to head back down and potentially test or start daily consolidation. We got to break 90.64, break the inside bar bear to start daily consolidation. And that's only going to happen if it's a bearish reaction to the inventory report. So that is where we stand overall. Bears are very confident and in control. And again, eventually we'll reach a point where everybody's on one side of the boat and the daily bounce gets going, but we're not there yet. And again, we're not even really seeing, when's the last gap down we saw? We may be shaping up for a gap down now because we're taking out key supports and fresh fear lows and close at the low of the day. That's another thing. Again, just little observations, but we bounced into the end of the day. The last 2 days in a row, and 3 out of the last 4 days in a row, and certainly not the case today. So, overall, bears are confident and in control. And we're watching the fear lows on all our major sectors. NASDAQ, bear break. SPY on the verge of a bear break, XLF, a lot more space, a lot of other sectors, more space. But certainly the fact that QQQ breaks to the lower low increases probabilities that everybody can break to the lower low. We knew QQQ would break first. We could say that 4 days ago. If anybody's going to break weekly support first, it's going to be QQQ. So now we have that. And the question is, how does the rest of the market respond? And again, it's just a barrage of negative headlines. It's almost like, I don't know what the deal is with the US with these headlines, like constant, who knows? I'm not even going to go down that rabbit hole. But at this point, the only bullish headline would be, again, diplomacy or something in terms of withdrawal. But the bears have that momentum. Keep it simple with the hourly downtrend. That is as simple as it gets as far as our short-term guide. We are not going to bounce anywhere on the daily time frames if we keep setting hourly lower highs and don't change hourly trends to the bulls. Congrats, bears. Big win. Certainly plenty of bears out there. And they've been having a good week. I'm going to be away a little bit for the next couple of days. Lori will step in and do the video tomorrow. And I'll see you all soon. Do good things.